Welcome back to the Lease Option live stream Wednesday night live chat where we bring on folks that help us get to that first deal or maybe the next deal paycheck. I like to call that paycheck the shut up money check. The shut up money when you can tell all the doubters and the haters and all the naysayers. Man, let me tell you what, there's a bunch of those right now. There's a bunch of those out there in the world. Yes, right now in the world with the state, the condition of things, there's a lot of naysayers out there, but we have hope. That's right, we do. And we are here to share that hope with you because there is money to be made, especially in such an economic opportunity that we live in right now. And so I brought on, I want to introduce this guy in a special way, but I I don't know. I didn't get his approval or anything, but he's the only fella that's ever said yes to coming on this show with me to talk about money. And you say, well, that doesn't make sense. Just you've had a lot of great guests. Well, I have had a lot of great guests, and tonight is no different. But tonight we have someone specifically experted in the area of money, lending. That's right. So I don't know why these guys have been hard for me to get on, but when I met Andre, instantly loved Andre. All right, so I knew I had to invite him to come on and answer some questions and just chat with me for a while, and you guys too out there. So go ahead and if you want to say hello in the chat, we'll open up live chat here and you guys can throw questions in and they'll pop right up here on the screen and Andre and I will answer that. But I wanted to have somebody on about money. Welcome Andre. I'm glad you're here.
Thanks.
Thanks for being
I'm
here.
glad to be here, Justin. I love your show. I got to tell you, as a guy who kind of, just does deals and, structures loans and often working late 'cause I got clients on both coasts. Whenever I see you go live on my LinkedIn feed, you're one of the ones that I click on because I always am interested to see what you're going to say. And I love it.
And I really appreciate that. And I appreciate that you say it's from LinkedIn too. Because LinkedIn's it's a tough platform. I feel like, and I think it's awesome that you support me over there. I really want to say thank you for that. Appreciate it.
No problem. There's a bunch of guys who come on there, but you're right. You don't get a lot of traffic on LinkedIn when you do live posts. It doesn't really do that, but that's the only one that I really use. I don't really use like Facebook or Instagram or anything like that.
Yeah. Well, I appreciate that you watch it over there, and I've seen that a few other people catch it too, and I'm always amazed. I'm like, wow, I didn't really think anybody was gonna be. Anyway, thank you. I'm flattered. Having you on is kind of cool, and I think the first thing we should tell everybody is that we found something that was kind of interesting about it
You
ourselves.
got to tell that story. You got to tell
Yeah,
that story. Yeah.
and I feel like it's really relevant because you see, Andre here is you spell his name Andre,
That's right.
and I have a middle name that you spell the same exact way, except when I told him, and you just gotta catch this. I said, except my middle name Andre has that accent mark right there on the E, and he said, so does mine. I was like, get out of here, no way. So he's got accent mark on his name. I've got accent mark on my name. Um, it's pretty cool. I was I said, hey, it's like I was named after you. I could have been. I don't really.
It's
It's
got that lets everybody know to really stress that A sound at the end, that Andre. It's like an accentuation of the E sound at the end, and so yeah, that's it.
so, uh, it's I was told that that's what made it French, but
Yeah, that's exactly what it is. That's exactly what it is. So whenever you go to a restaurant and you order some wine, just tell them,
yeah.
yeah, I'm Andre. I want some wine.
It,
Yeah.
I've literally never done that though. Never.
Right.
No.
You got to
But
try
yeah.
it sometime, man. You got to try it sometime. Live a little, live a little, live a little.
Go,
Give it a
you know.
try.
Well, I'm saying like, what's my middle name? See, so that's why.
Oh, you don't really
But
go
yeah,
around telling everybody, yeah, your name, your
yeah,
middle name is Andre. Yeah, yeah, yeah.
right,
But you ought to try
yeah.
it. I think you look like an Andre with put on one of those French hats and
It
get a
is a
glass
cool
of wine.
name, man.
Yeah,
It is a cool name, and I ought to employ it somehow. And instead of just the boring traditional first last Justin Chandler.
yeah.
But
Well,
I always thought,
JAC looks good too. If you did the JAC, that would look good too. Yeah,
yeah, it looks like Jack a
yeah,
little
yeah,
bit though.
yeah, yeah. That looks good.
uh, so welcome, Andre. I'm real glad you're here, man. I want to pop off with a question about being in the apocalypse.
Yeah,
I mean, I feel like we're pretty much living in the apocalypse almost.
yeah. Things are changing rapidly.
That's
Things are changing rapidly. Yeah.
so. As an expert in this chaotic world, are traditional banks really something that real estate investors should be looking at, or should they just be thinking totally? I just need to find some private lenders or hard money lenders for their deals. What do you see as some pros and cons right now for folks in this crazy world we live in?
So I'm in the commercial lending space, and so we do what is considered DSCR loans, fix and flip loans, and stuff like that. So it's a little different because we have guidelines to kind of write to that
What is a DSCR loan? Tell
debt
us that.
service coverage ratio loans. And
Okay.
so it's based upon the property's cash flows and not your personal income, like no W-2 required, no tax returns, etc. So that's kind of, the big difference there. So I would say, because, Fannie Mae just came out with a new program where I think for a 1 to 4 unit, where they're offering like a 5% down program or something like that. And you can do that pretty easily. I don't make those types of loans, so I don't really follow it. But so to answer your question, it depends on where you are. If you've got a strong enough credit score, and you've got a W-2 with some income that you can qualify for, getting an agency loan is not a bad thing. It's just a lot of paperwork. But it's a way for you to get in with little or no money down. You've got that government guarantee with you. You can kind of, do some house hacking there. If you're out here running and gunning, then hard money is the way to go, because you can find a local guy that you can tell your story to, and he'll put the money up, and you guys will be in business together. He's probably going to charge you, a little bit more in interest and some points, because he's more than just your lender at that point. At that point, he's your partner. And then you've got guys like me out there that are lending money to seasoned investors that are doing deals and growing their portfolio. So it really just kind of depends on where you are.
The DCSR, debt
DSCR,
coverage,
debt
yeah,
service
debt
coverage ratio.
service
Yeah,
coverage ratio.
yeah, yeah.
That's very interesting to me. What are? Can you tell me a little more about that?
Can you do what now?
Can you tell me a little more about that? Those.
Yeah. So the basics of it are, they're used for acquisition and refinances. We can do an 80% acquisition. We can do a 75% refinance. Minimum credit score is a 660. And what we're looking for there is we're looking for a positive cash flow. Now, we can do a negative cash flow, meaning that the debt service coverage ratio is below 1. And so we can do that if you have a 700 plus score. But the challenge with that is that the rate's a little higher, and the terms are a little tougher with that. But we can still get it done with the anticipation that you're going to be increasing rents over time. And then that way we'll get a better cash flow as we kind of go forward. In regards to where I see most of that being used right now, my biggest clients are in the build to rent space right now. So they're building, 20 unit subdivisions, 90 unit subdivisions, 150 unit subdivisions. They're building them out. We come in after. Now I can do the construction loans for them too, but oftentimes they'll already have a construction lender in place. And so then once they get them built, I'll come in and do a takeout for them with either a 0-year prepay or a 5-year prepayment penalty. You get a better rate with a 5-year prepayment penalty, but some of these guys are looking to sell it like within the first 12 months. So we end up doing 0 or 1-year prepayment, and that allows them to stabilize the property, bundle them up, and then after that, they take them all off and they send them out to their investors. So these it's become like an institutional play now. So a lot of these pension funds have started buying this stuff around the country, especially like in the Southeast right now. It's really strong in that market.
That's incredible. The whole build to rent idea.
Yeah.
Big kind of a being a developer. I guess that's what I would label it being a developer.
Yeah. So it's two phases of it. Justin. So you've got the land developer, obviously, but a lot of these guys are buying developed lots, and so they'll buy the developed lot and then come in and do the construction, and then after the construction, we'll put the long-term debt on it for them. So there's phases to it. So, and I don't know, we're just having a conversation. So, before I got into the position of lending money, I actually started off fixing and flipping houses, and then I started building infill, like infill on scattered sites in and around with my father in and around Los Angeles, and then I did it in and around Atlanta, and then I started developing land and building houses on that. And so a lot of guys don't do that anymore. When you get to a certain size, you just buy the developed lot because it takes a lot to kind of carry the land, and do all the entitlements and everything.
Right. With the
That's
county
like
and
a
the
business.
city and all
You
that.
got it. That's like a business unto itself to kind of do. So yeah.
Wow. Yeah. Wow. This is interesting. I would want to talk about that more, but I also want to acknowledge our audience. Thanks for watching tonight. Everybody that's tuning in on several different platforms. Thank you for where you're watching. If you want to put something in the chat, I'll do my best to throw it up here on the screen. Michael Foster put something in, wants to know what would you suggest for him? No credit history, good credit somehow, and want to start house hacking. Not sure if I understand completely, but
Yeah, I
um,
kind of get the idea. So it looks
sure,
like no credit history, but he's got good credit. So I'm assuming he would define good credit somewhere around 680. I don't know what that means to him, but that would be
sure,
good credit.
right,
Somewhere around 680. 620 would be, low end credit. 720 would be really good credit. So let's assume he's got a 680 credit score with no history and no experience, and he wants to do house hacking. If he's got a job, he's the guy to go after that agency loan. He needs to get, an FHA loan where you can put down 5%, and, find something where he can either get a roommate in there with him or a duplex or something like that, and generate some cash to, help him pay for it, build up
yeah,
some equity, and then kind of go. And then maybe do, I love the other night you had on a show that you did about the lease purchase market and how that's really taken off right now.
yeah,
I think that after he builds up some equity and he's got some cash, because what a lot of people don't understand is when they get into this business, you get in because you're trying to figure out how to make a living. But if you only got $1,000 to your name or less, you're gonna have a real hard time doing any deal because the legal fees are gonna eat you up. Just trying to get a contract and everything taken care of.
right,
So you got to have a partner or you got to build up some equity. So if you got a job, and I tell people all the time that, a job's not a terrible thing, especially when you're starting out, because where else? Because if you come to me as like the private equity partner or something like that, and you say, hey, Andre, I want you to partner up with me. I'm going to ask you to do 8 hours worth of work for me. I'm going to ask you to call some leads. I'm going to ask you to, structure some deals to put some stuff together.
yeah,
And I'm not going to pay you anything for doing that. You're gonna eat what you kill, and I'm not gonna give you any insurance, so you're not gonna have any benefits or anything like that. So if you got a partner that's willing to pay you for 8 hours worth of work, give you some benefits, some dental, some health, and then tell you that you got the rest of the day, you got the other, what's that, 16 hours of the day that you can do whatever you want. I think that's a good
Oh
partner.
yeah. Oh yeah.
You know what I mean? So
Yeah.
go ahead and do your first deal that way.
Yeah.
Get a partner that'll let you get a house with 5% down,
Mm.
stay in that house, build up some equity, refinance it, or either get a line of credit against it where you can pull out $10,000 or $20,000, and then go out here and structure your next deal with either like the lease purchase that you're talking about, or
Yeah.
fix and flip something, something along those. That's just kind of my thought to answer Michael's question.
Boom. Mic drop moment right there. Really. I mean, just really straightly, that's what it is. I mean, if you want to know, you look at, if you're a guy like me, I'll just say it like this. If you're a guy like me, you look at other guys and you go, now that guy there, he's playing it straight, like by the book. Like he knows he's just doing what works, and that's why it's working for him. And damn it, I wish I'd have started that 25 years ago when I didn't.
Right.
when right when I made some key decisions, right?
Right. Right.
What you just said there is really, um, that's house hacking, and man, what a big topic nowadays.
Yeah.
Uh,
It's
rightfully
really the
so.
it's really the only way to get on the ladder, and get started on building some real wealth, especially, here in this market, uh, because you can start building up some equity pretty quickly.
Yeah.
And once you build up that equity, you got more options available to you is what it boils down to. And it's really about just getting yourself in a position where you got more options.
Mm, more options. That's right. We all like that, don't we? We all like more options.
Yeah, yeah,
So,
yeah.
is that debt service coverage loan? Is that something that's not just rural or urban or something like that? Is it?
Well, we don't do rural, so it has to be urban or suburban. And so we want a growing market. Minimum loan is about 90,000, so it's got to be something like that. It's got to be you got to have some cash flow on it,
Yeah.
and know what we call deferred maintenance issues on there. So the thing that I really like
What is that?
about
Deferred
deferred
maintenance
maintenance,
meaning slow
so that's a
pay,
term.
something like that, or like
No,
what?
no, no. So deferred maintenance is a term. I think it's either Fannie Mae or HUD uses it. And so deferred maintenance issues are like if you go in and you don't fix your roof, it's going to have a leak. You've deferred the maintenance on your roof, and so now all of a sudden you got a roof leak. Your smoke detector fell down a year ago, and you never put it back
Oh,
up. That's
oh,
deferred
that's
maintenance.
playing with your life.
Yeah, yeah. The handrail on your front steps, your nieces and nephews came by and were, swinging on it and
Oh
broke it
yeah,
off. Or your drunk uncle came through and
bust
started
bust
cussing
their
you out.
ass. Yeah.
Yeah, when your drunk uncle came through and cussed you out on the way out the door and fell over the handrail, and
Yeah. Bust his
you
ass
did,
too.
yeah, you didn't fix it. Those are deferred maintenance issues. So you can't have any of those in order
Yeah.
to do it. And so you got to be prepared to repair those. And again, that's why you got to have some cash, because you got to be able to, cover this type of stuff to get into this game.
Yeah, definitely. I feel like that's good advice, because a lot of folks out there are trying to take a shortcut someplace.
Yeah, 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 yeah.
And
And you end up shortcuts. Normally, it'll end up in a dead ends.
yeah, yeah, wind up in a ditch.
Yeah,
That's the thing. The shortcut is really not the shortcut. The shortcut is the boring way that makes a lot of sense, like what he's saying, like having a job and like
right.
having some down payment saved up,
Yeah,
and
yeah,
sometimes that house hacking like that is absolutely what you ought to do. Uh,
yeah,
I
yeah,
think if I'm a young guy again, which I'm not, but if I was and I was starting over from scratch, Yeah, I'd be doing some of
Yeah,
that
it makes sense,
myself.
doesn't it? It makes
It
sense, doesn't it?
certainly does. In
Yeah,
retrospect, it does. So if you're out
it
there,
does. I
you
was,
got some youth
30
on
years
you.
ago.
Yeah.
I'm 50 something now, so I mean, I've been out here for a minute, and so and and I'm not gonna, sit here and act like I had it all figured out when I was 20. I thought that I was gonna come out the gate and just make $1 million immediately and just kind of structure my first deal and get it done, and uh, hard money my way to $1 billion industry, and it really over time. What I've learned is what I'm telling people now is that, hey, yeah, you can do it that way, but there is a slower, easier way to do it.
Isn't that crazy? Slower and easier usually means boring. That's what I
Yeah,
mean when I say
that's
boring.
exactly right. That's right. It's slow, but it
Yeah.
is easy.
It's not exciting.
It's not
Yeah.
exciting. It's not exciting. Yeah, yeah, yeah. It's not exciting. You got to get
Isn't
up and
that
just do the
crazy
same thing
about
over again.
success is not necessarily exciting. It's boring, but
It
boring
it
is
it
best.
really is. Depending on how you would describe
Well,
success, because some
yeah.
people, they think success is you know, partying every night and all that good stuff. They think that that's
Well,
oh, I'm successful.
maybe when you're 21 years old, maybe that is
Right,
true.
right, 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 right. Yeah, buying all the bottles and stuff like that. They think that's
Oh yeah.
successful, but
You can
yeah,
have whatever you like.
like you know it, Justin. You know it. That's why I love your show, man. That's why I love your show.
Well, hey, how do I get the best deal from a money guy like you? What
Uh,
do I got to do to get the best deal? How do I know I'm getting the best of the best deal here without getting?
Without getting run over.
Yeah, I'm not paying too many. What do they call them? Points.
Yeah,
Score. Do
that's
you
right.
guys do that?
Yeah, we do points. We do the points. We do points. The best deal goes to the best client, to be honest
Yeah.
with you. I mean, there's no way around it.
What
It's
what's that mean?
720 credits,
I gotta have a
720,
lot of experience.
yeah, 720 credit score, 6 deals under your belt, and a deal that makes sense. That's how you get the best deal.
Wow, that's not that bad,
Rate.
y'all. That's not
No,
that
it's not
bad.
that bad. It's not that bad, but
You could be
that's
halfway there by the end of the year. Oh,
easily, really easily, really. And you may not get the best deal if you're halfway there, but you'll get a better deal than you will. So, and I tell people this all the time: when you're starting out, it's always easier to go the hard money route. That's the way I started. But at some point, you got to look at how much that hard money is costing you, because he's doing it easy for you,
yeah.
but he's costing you something.
Oh
It's
yeah.
either, he's going to charge you some points up front, 5 to 10 points up front, or he's going to charge you a little bit higher on the interest rate to kind of go through. And so it doesn't seem like a lot, but if you're only getting, let's say, 3 deals a year and you're giving away an extra 5 to 10 points
Yeah.
on it because of the interest rate and the points,
Yeah.
man, do you want to take that extra $10,000 or $20,000 and stack it away so you're ready for your next deal, or do you want to just keep giving it to your guy because he makes it easy for you?
Uh, well, is he watching the show right now?
Yeah. I mean, you got to have honest conversations, when you're in this business. It's a grown person's business, you know what
Right.
I mean? And so you gotta he understands what it is and he
Oh
understands
yeah.
his value. You know
Right.
what I mean? He knows that
Right.
he gets that because he'll drive by the shot and he'll take a look at it and he'll tell you, okay, we'll fund the
Yeah.
deal. Go ahead and call the attorney, we'll close tomorrow, or whereas, other people like me will say, well, let me get an appraisal, let me get my underwriter to look at it to make sure I didn't miss anything. Let me
Well,
get my processor to call you and get your bank statements verified and make sure that that you didn't print it yourself. That it's a
yeah.
real bank statement, all that good stuff.
Man. Huh. Remember back in the day when you could do that? No, I'm
I do, man. I do. I do. I do. I've been
Oh
around
my
a long
gosh.
time. I've been around a long time. Yeah.
Hey.
You could just change the numbers on the statement. You know
Hey,
what I
that
mean?
stuff's in the news right now.
Yeah.
Somebody's
Well,
on trial for that right now.
it doesn't work anymore. and guys are
Oh,
still trying to do it because we can verify all of this with a press of a button. I tell you, my processor gets it. We scan it into the system, and if anything is off, we can check it. By just
yeah.
checking the print type, and then we just call for a verification from the bank after we find any discrepancies.
They got you. They got you.
It's way too easy to get caught, though. I remember, Justin, I started off so long ago. I remember that my lumber supplier, great company, they would let me write them a check, and I'd write them a check on, say, like a Thursday. They would deliver the lumber to me on Friday, and I'd be able to float the check until my draw came in like next week, Friday. I'd have like, 8
Right.
days.
Right.
To kind of float it. You
Right.
take a check to anybody now, they scan it through the system and the money comes out while you're standing there. It's like,
Instantaneous.
the whole game has changed,
Yeah. Yeah, no doubt. And you watch movies, you hear stories like back in the 80s, it's like anything seems like anything worked. I don't know. It's like a different world, wasn't it?
Yes, it
Back
was. It
then.
really was. I mean, real estate's always been kind of the wild,
Wow.
go
Yeah.
around. But,
Yeah.
back then it was, you had a lot more options that you can kind
Oh,
of,
yeah.
go with and things of that nature.
Assumable loans were a thing.
Oh man,
You
yeah, the whole
know?
thing. I mean, guys are still doing those, from what I understand, but I think it's a little, touch and go depending on which lender you go with. But yeah, guys are still doing them though.
Assumable meaning like no qualified
Yeah,
assumption.
that's exactly right.
Yeah.
That's
Just
exactly
like
right.
I'm stepping in.
That's
Here
right.
I am.
That's right. I'll send you the payment. Look, I'll send you the payment. Maybe. Yeah,
I'm the guy now.
that's right. That's right.
Yeah. How easy is that? But man, they changed that, didn't
Yeah, they did. Yeah, they did.
they?
And rightfully so.
Wow.
And rightfully
Yeah.
so. Yeah, yeah.
So then I'm gonna ask a dumb question, Andre, and I
Okay.
appreciate you just hanging out with me tonight, talking about whatever we talk about. But
Right, right.
what, where do you get the money? Where does a lender get money? Because you guys have partners, or you have friends, or you have buddies, or you have investors. I mean, can you kind of describe to me this scenario? Because a lot of times, as an investor, I've borrowed money from lenders, hard money guys, private lenders, other people, and really a lot of times I don't really know who all is involved, and there's
Right.
other folks in back behind the curtain, so to speak. And I can you kind of tell me how it works? Just
Yeah. So specifically with my group right now, we get most of our money from like insurance companies, pension funds, etc., stuff like that.
I see.
We're tied
So they're
into those
making a
groups.
big lump sum investment
Yeah.
of cash.
And so that's what we're doing. But a lot of these small hard money lenders, they'll have like a line of credit or something like that, they'll put a little markup on it. So they'll go to the bank,
Wow.
get $1 million line of credit, and then they'll put it out on the street at that +2, +3, +5, +7, whatever. And so
Wow.
that's how most of your local hard money guys do it. And then you have
Wow.
hard money
Oh,
funds.
that is so smart, man. I don't know
Yeah,
why I never put it together that's that easy.
yeah.
Jeez.
That's why they run out of money. So like a lot of times you'll be working with a hard money guy and he'll run out of
Yeah.
money. It's because
Right.
he's used up his entire line, and so he's got it on the street. And then you got hard money funds that are out there, and the hard money funds, um, they normally pull together what's commonly called like accredited investors
Yeah.
that are looking for a nice little yield
Yeah.
on what they're doing.
Yeah.
And so, they'll put in, this Johnny will put in 200,000.
Yeah.
Andre will put in, 100,000. Mike will put in 1 million, and then they'll stack it up, and then they'll put it out on the street, normally with some looser guidelines, but they'll have some guidelines because it's a fund, and you got to protect everybody's money.
Yeah.
And so, and then you got just rich guys that that like doing deals.
Get rich guys.
Yeah,
Those are
and they'll
family offices. Is it?
family offices is the fancy term for it. But I used to
Yeah.
have a guy here uh, that was he was just I think his family had owned like a shoe store or something back in the day,
Mm.
and so he you would literally call him up and say, hey, I got a deal I want you to look at. He'd come by and pick you up in his car. You drive around, show him the property.
Yeah.
He'd drive around the block or two. You know, he'll talk to you for a second, and then he'll say, okay, yeah, send it over to. He had an attorney that he worked with all the time. He said, yeah, send it over to him. We'll go ahead. We'll close it. We'll do it.
Mm.
So I mean, now you call it a family office, but it was just a rich guy who had some money and he wanted to do some deals.
Yeah.
But yeah, we get ours from insurance companies and pension funds. So.
That's nice. It's big kind of business money coming in
What's
there.
so
So
crazy
yeah.
is that I didn't really understand this, because I started off, like I said, doing fix and flips and things of that nature. When I was in college, I was fortunate enough to do an internship with a big pension fund. And that was the first time that I really understood how large projects get financed because these pension funds are and sovereign wealth funds and insurance companies, they all have to meet certain requirements to pay out either the payment to the insurance company, like to the insurers or the policyholders, and
Sure.
and then for the pensioners, when they get ready to retire, they got to meet that. So where do they put it? Most of it goes into like equities and stocks and things of that nature.
Yeah.
So that's why Blackstone gets so much of the money because they
Yeah.
get is it Blackstone or BlackRock? I can't.
BlackRock.
Is it BlackRock? Yeah,
Yeah.
BlackRock. Yeah. So BlackRock gets so much of the money because it all goes into equities with them, and then Blackstone does the alternative investments. So they'll buy a bunch of real estate. Like Invitation Homes. They started
Mm-hmm.
Invitation Homes, which is
Mm.
the largest owner of single family homes in the U.S. right now, or number two, I think.
Wow.
Neither number one or number two. So they'll
Wow.
do that,
Does that
and they
scare you?
fund them on. Well,
Being you're kind of a you got an inside look at how things work. Like
yeah, yeah,
beyond your peers. Like the man on the street, for example. So
yeah.
does that scare you?
So this is what I'll say about that. I think that here in America specifically, we've had a great opportunity to be owners. Like something I didn't know, and the guys listening to us can confirm it. I didn't know that most of the land in London is actually owned by the royal family,
Okay.
and everybody else has a lease on it.
Oh yeah. I think all of Canada is that way too, maybe or something.
You know what I mean?
I don't know. Yeah.
Yeah. You
Right.
know, and there's a
Right.
couple of markets here like Manhattan and Baltimore that have, a lot of leasehold agreements on properties that we kind of deal with. But in America overall, we've had this great experiment where, you can actually own the place where you lay your head at night and you can get the money pretty cheap
Yeah.
and you don't have to put 50% down. You go to
Right.
most places around the world, you want to buy a piece of property, they'll tell you, okay, put down 30%. And when we get started, not when we're get
Right.
done, when we get started, you can bring another 30%. And then the day after we finish it, you bring the rest of the money,
Right.
or else we just keep what you gave us. And
Right.
so,
Yeah.
does it scare me? I think that, I think a lot of people have taken it for granted what we've
Right.
had here without really understanding how the world really works.
Right. Man, what an interesting perspective. Yeah. Wow, that's awesome. Thank you for sharing that with me. I never thought of it in those lights like that. That's very true though. I mean, if you think about it, yeah. I think the royal family owns a lot of stuff around the world, and maybe you
Right.
wouldn't even really know even.
That's right. That's
Yeah.
right. You got it. And
What
so,
what's this guy talking about, Max Hernandez? Thanks for
what he
watching,
say?
Max. He says, "Who are the buyers in this coming blockchain economy?" You know what he's talking about there, Andre?
Nah, but I mean, we're just talking so we can, you know,
We
come
can
up with a
speculate.
hypothesis. Yeah,
Yeah,
what you saying? So
we'll
who?
speculate a little bit,
Yeah, a
Max.
little bit. Yeah. So the buyers in the blockchain economy. So I guess what he's saying is, in this world where where everything's going to be digitized,
Yeah,
and we'll be able to confirm, who owns what through the blockchain and through these things, who would be the buyers? It's going to be the people with the capital, is what it's going to come down to be, because um, just like anything else, when you put everything in and it's become centralized,
yeah,
those with the money, they control it pretty easily. That's why they want it centralized. And so um, the guys with the capital would be the ones that own everything. I mean, that's why this whole Airbnb and Uber economy and um, all this shared ownership model type of thing.
yeah.
All that is just we can get philosophical if you want to a little bit, but just kind of go back to the most recent terms that we know of, which are like landlords and serfs, right?
Yeah.
So what happens with the landlord and serf relationship? The landlord owns everything, the serf gets to work the land, right?
Right.
And then you've got those people that have some rights of to the land, but the landlord still owns it all
Right.
because it's enforced by whoever the royalty is or
Yeah.
whatever's going on. And so
It's not a
and
far
so
cry from that already, right? I mean,
no, no.
feudalism. I mean,
That's right.
basically.
That's right. That's it. That's
So
where we are. And
yeah,
like I said, it's been an experiment here in the U.S. that we've all have kind of taken for granted, but it's just an experiment.
Hmm. Wow. And still just mind blowing amounts of opportunity out there in the world.
Oh, it is because it's not settled yet,
No,
but
if you,
it's only available to those who are willing to do what it takes to do it every day. It's
well,
something that you got
let,
to do it every day.
let's let's try to wrap up with that thought there because that's probably a good note to end on. And I don't want to keep you all night here. I'm having fun talking to you though.
Man, it's been good, man. Like I said, I want you for nothing. So I mean, talking to you is better.
Man, I appreciate that, dude. Um, you were talking about you didn't say it in these words, but adapting, uh, thriving in this new environment. Mm, I don't know if it's so much of a new environment as maybe a replay of an older environment, but maybe it's just a negative environment,
Right?
because, like I said, there's a lot of opportunity out there right now,
Yeah.
especially in real estate. So, what advice would you have for anybody? What things could we maybe do or think about, consider to adapt or change to that where we could thrive in spite of or in lieu of the current scenarios out there? Does that make sense?
Yeah. That's a good point. So so one of the things I was always told, and I've just started to understand it more as I've gotten older, is a guy who knows how will always have a job, but the
Yeah.
guy who knows why will always be able to hire the guy who knows how.
Right. Wow. That's a good one. I like that. Yeah. I I like that. I've never heard it said like that before. But there is something powerful about the guy who has all the right questions. So, yeah.
Yeah, but if you know why something is, then you can just go get the house, the guys who know how to do it. And so, I would say just from a 30,000 foot view, figure out the why things are happening. So like right now, I think specifically in what you deal with on this show, you were talking about it's going to be the greatest lease option time
I
ever.
think so. Yeah.
And the reason is because money has never been as cheap as it was over the past
Right.
3 years.
Right.
I mean, we had
Oh,
money literally at 2%. I mean,
crazy.
we were lending money at 2% on
Yeah.
investment properties. You know what I mean?
Right.
So
Right.
it was money had never been that cheap before. And like I always tell people when they complain to me about the rates, I say, well, is money valuable? And if it is valuable, how can it be cheap?
It's a good question. It's a good question. Yeah. I I love I love the idea that right now you can go out there and just exactly what you were saying, find deals that are they're paying 2-3%, but the going rate right now in the market is 8%.
Right.
That's
That's the deal for a guy who hasn't, really got a leg up, hadn't really started. He needs to, meet as many of those 2%, 3%, 4% people that are in that, let's say, let's call it 60 to 80-year-old range. And they don't have like an exit strategy because there's a bunch of people who don't have, kids. They don't have,
yeah.
they don't have, family that, but they've got these properties. And
Oh,
so
yeah.
if you could go out there and knock on enough doors and shake enough hands and make it make sense to them to where they can get enough to sustain themselves, someplace else, and you take over that 2% money and
Wow. I
get it
know.
to somebody, you know,
Yeah.
I think that's an opportunity. And I think
That's a
that's what you were
huge
talking about the other
opportunity.
night. So
Yeah.
if you're asking me what I would tell a guy to do that didn't have anything, I would tell him to spend as much time as he could on one of these platforms, finding mortgages that were originated somewhere in that 2 to 4% range, and trying to figure out a way to meet those
Right.
people and get an opportunity, to help them and then help yourself in the
Yeah.
process.
The numbers are like more like excuse me. If you found the right deal, you could cash flow $1,000 a month off of a deal.
Wow.
You really could.
Wow.
I mean, it's possible. Like,
Yeah.
what if you found somebody, you took over their that 2%, like you said, took over that 2% money, and then you place somebody in there at 7%, seven and a
Right.
half or something. And I mean, that's I don't know, depending on the price, of course, but that can be several $100s a month. I mean, maybe even
That's the
approaching
spread. That's the
maybe
spread.
approaching 1,000 a month even.
You would ask me where the guys get the money to lend it. And I told you where we get ours, but I told you about rich guys that put the money out there, or they get the line of credit and they put a spread on it. That's the same thing.
Yeah.
It's the exact same thing. You,
Yeah.
you just make the spread.
Wow. See, that's smart. That's smart, and you got the wheels turning for me there. There's a bunch of stuff though. Like I've known some guys that got involved in. They got involved in doing some stuff. Not, I don't think they knew what they were doing, but they ended up in prison.
Yeah, I've seen that too.
You seen that too?
I've seen
Uh,
that. I've seen, people, do quick claim deeds with old women and, and then,
yeah.
then it gets ugly real quick. And
Well,
so,
that is crazy there.
but
But
again,
what?
you
Yeah, I
gotta
was
have,
talking about building these. Like a fella, like I'll just say, like a guy like me that has a lot of connections, and they start collecting money out of a bunch of different people and building their own fund, but not maybe doing it with the right dotting the right
oh,
I's and crossing the T's and all that.
well,
You know what I'm
everybody's
saying?
watching that other guy that, um, that flies around in his plane. I can't think of his name right now. Uh,
Well, Bankman
uh,
Freed, is that the
no,
guy?
no. No, this guy, he's like a social media marketeer. I mean, this guy, man, he when I first saw him, he was selling like books and teaching people how to
Oh
do their
yeah.
car
Is
dealerships
it
and
Ty
stuff.
Lopez or something?
No, no, not Ty Lopez, but it's a guy like this. He's out there. He's got a fund now, and he's raising money and building these apartment complexes. I mean, this
Oh
guy's,
yeah.
he's doing it right now. So,
Yeah.
you know, who I'm talking about. I just can't remember his name
Is it
right now.
Grant Cardone?
Grant Cardone. That's it. Yeah,
Yeah.
that guy. And so that guy, everybody's looking at him, but they don't understand that one, he's spending a bunch of money on legal fees. Number
Oh yeah.
two, he's throwing these events all over the country and, using that as his funnel to kind of go through. But more importantly, uh, is is that he spent all of the time making sure that those legal issues were
Yeah.
addressed in
Yeah.
a fund, because if you don't
Yeah.
have that covered,
Yeah.
you're setting yourself up, especially if
Yeah.
you're dealing with non-accredited investors.
Right.
You're setting yourself
Yeah.
up for a lot of heartache.
So he basically what you're saying is that dude has paid the price to have a country club membership, and he's in the country club with.
And he's paid the price. He's done the time. He's set up all the legal protections necessary
Yeah.
to be able to withstand it. Because I don't know anything about him. I don't even know the guy, but
All
I'm
right.
just saying,
Yeah, but he's done it
yeah.
the right.
Well,
He's
he's
paid the
done it.
right people the right ways.
He's done it the right way in order to keep himself out of legal issues. And so if you come in here and you think you're just going to put together 20 folks and get everybody to give you, $20,000, and you're going to,
Yeah,
go out
gotta
here
watch
and
that.
pay for your lunch every day, that's not how it works.
Wow. Yeah, I've seen some guys do that though. I've seen them end up
Yeah, most
in
guys
prison.
make the mistake of doing it. Most funds don't make any money because the guy who puts it together doesn't really have a exit strategy.
Wow, that's crazy. Really?
Yeah,
Jeez.
yeah. Most funds don't make any money.
Huh.
Yeah.
And that's not a long term play anyway. I mean, but they don't even
No,
make
it's
any
not.
money in the short term.
No, because they're focused on, they've got one game plan and they're focused on the model for that game plan, but then they eat it all up in fees and operating costs.
Wow. Yeah, that's what it is. Some
Yeah,
operating costs.
that's right. That's right. That's right. You got it. You got it. You got it. You
Oh
got
my
it.
gosh, man. I've learned a lot tonight just talking with you about
Man,
this and that and the other thing about it. Like
man,
we didn't really have a.
I love your show. I love what you do, man. If there's ever a slot, because I'm normally working late anyway, and so if there's ever a
Mhm.
slot, man, where we can get on and talk and
Definitely.
maybe answer a few questions for people,
Yeah,
I love
definitely.
to do it. It just, you got a great spirit.
Thank you. I appreciate you.
I can't tell when I'm watching you sometime because you got the personality. So I can't really tell sometimes when you're serious or when you're not. And I like that. You know what I mean? I like it. I like it. So
I'm
it keeps
rarely
me on my
serious.
toes. It keeps me on my toes.
I appreciate that. Thank you for all your encouragement and everything. And yes, I definitely would love to have you come back anytime and just pop in if you want. And just kind of an open invitation. And we'll talk too after this. But I would like that. I mean, I've learned a lot just tonight about the money business. I feel like there's a lot of mystery around the money business,
Yeah. I
and
think
I
that that's
don't.
on purpose, though. I think,
Oh yeah, probably.
yeah, I think that's on purpose. That's how guys like me keep a job, by keeping it
Mhm.
mysterious.
Yeah,
Yeah. But it's
well, I
not
get that.
it's not complicated. It's not complicated.
I don't want to wreck your job, but that. But at the same time, I do kind of want to. What I want to do is I want to make sure, and I should have started out the whole night saying this, and I didn't, but
Right.
I want to make sure that I am using the available money out there in my real estate business. I want to make sure I'm using it to its fullest capacity because you can't read books like Rich Dad Poor Dad, other stuff Robert Kiyosaki talks about a lot, especially where he's like, you're living in a debt system. You know, you're in a
Right.
debt world. You know, and if you're trying to be debt free, then you're trying to escape a system that's built on debt. And if you want riches or wealth or peace of mind or passive income or any of that, then you're gonna have to become a friend of debt. And it's like, wow, I get that, but in a way, see, because I was raised the whole opposite effect
Right.
of, I was always told, hey, you know, borrower servant to the lender, and that's all true, you know, but
That is, yeah.
it's you know, keep your expenses low, keep your, you know, keep your name good, and try not to borrow as much, you know, keep your credit cards at 20%, and don't, you
Right.
know, it's like quite a bit of fear that comes along with debt, you know, so,
Right.
and I
And
think,
it should, because it's a tool, and it's a powerful tool, but it's
yeah,
also dangerous. So because of that power, but
right.
yeah, but go ahead.
No, perfectly said, because so succinctly, because that's really my point. Is I want to try to come up in my personal game where I feel like I am wisely using this tool of lending. There's lending available, and every wealthy person, every real estate success story you've ever heard, or I've ever heard, they have money relationships. They are borrowing money for this project, for that project, for this short-term play, for this long-term buy and hold, for this development, for this, and then, you know, I sit around and I'm like, ooh, I didn't even know that loan existed. Like, how
Right.
did, you know, how are these guys putting these? Man, I need to come up in my game. So my hope is that in developing a relationship with Andre here, that I'll have you on enough frequently that we'll get to know each other a little bit better, but also that I'll be able to kind of, you know, suck some wisdom off you, man, if that's okay. You know, like
Yeah.
I'd like to get
Yeah.
a better
Absolutely.
perspective on things just by hanging out with you, so that I can maybe make sure I'm employing all the opportunities that there are out there. Because what I want to make sure I do is I want to maximize my opportunities that exist for me in my life. You know, there's probably a finite amount of them somewhere, but
Right.
so I want to grab the ones that are there, and I think that means I need to come up in my knowledge. So I'm real proud to know you now, Andre. Real glad to
Man,
hear
I
you're a
appreciate it,
friend.
Justin. Man, your show is great, man. I don't know if I don't know how much feedback you get off of it, man, but it's a real gem. I think I told you last time we spoke that it reminds me of like college radio.
Thank you. Yeah, I appreciate you saying that. It's kind of, you know, humorous. I feel like, you know, from time to
Yeah,
time.
yeah. It's not it's not like like one of these big radio stations or TV shows where everything is all you get to see the real personality of the host, and I like that, man. I really do. And then you bring some real gems, even like just when you were and I think it was either last week's show or yeah, I think it was last week's show where you were talking about the biggest opportunity in lease purchases.
Mhm.
And when I thought about it, and I thought about the why, it's because we've come off of the cheapest
Oh,
money in history.
I know, right? Followed by the most expensive in recent history, right?
Yeah,
So,
but it had to, because
yeah.
it's really just kind of going back to the norm. When I
Dude,
first
I
started,
totally agree with that, because it ain't the first time it's hit 8%. Shit, I
no,
remember back
and
when I
people are
was
freaking
20
out.
something years old, it was 8%, and
Yeah,
prices were high too.
that's right. People are
But
freaking out about 8%. I remember back in the late 80s, early 90s, when I was watching my dad do it, and when I was doing a couple of deals myself, it was nothing for rates to be around 9%.
I
Absolutely nothing.
I'm not that old, but I've heard that in the 80s it was 18%. Is that
It
right?
was 18%. Now that was before I was aware of it. But yes, in the 80s, there were you would go to your mortgage company to get a mortgage, and
Yeah.
you would be prepared to pay somewhere between 12 and 18%. And that's for, a loan where you have to provide tax returns, leverage against your house, the whole thing. And it was between 12 and 18%. So yeah.
Yeah.
And
Fun
deals were
fun
done. Deals were
times.
done.
Oh
They were.
yeah,
Deals were done. So
yeah,
deals will continue to be done, Justin. Deals will be continue to be
absolutely.
done. Yeah. And so you just
That's
got to figure out what you want to do.
that's a good word. That's a good word. So I'm definitely looking forward to developing this relationship, Andre. And I think it's so cool. You're the only guy I've ever met in my whole life that has the same accent mark
Yeah.
on the E. Dude, that's awesome, man. All
We're
right.
winning. We're winning,
Hey,
Justin.
hey, what's your middle name?
Lachey.
Okay. See, that matches the Andre.
That's right.
Andre.
My
Do
mother
you
was a
have an
poet.
accent mark on Lachey?
No, I don't, but it's L lowercase e and then capital S. So Lachey. Yeah.
Lachey.
Yeah.
That's
Yeah.
nice,
I
man.
think she wanted
That's
me to be French.
that is classy, dude.
Yeah.
Yeah. Andre Lachey Shepherd.
Yeah, Andre Lachey
Man.
Shepherd. Yeah, yeah.
See, it just sounds
Sound
like
like
opulence.
yeah,
Well,
sound like a French lord or something. Yeah.
that's great. That's great. I don't know any other French. So you're the only
Not
French
really.
person I know now.
Yeah, and I'm not French. Look at I'm not French. I'm from California.
He's from LA, right?
That's right. That's right.
That's great. Yeah. Anyway, it's really cool to have met you, and I'll look forward to talking with you again soon.
Same
Andre,
here, Justin.
thanks for visiting with me
Invite me
for a
on
while.
anytime. You know how to hit me up, and let's
Sure will.
let's continue the conversation.
We'll
I enjoyed
definitely
it.
will, and we'll be friends too, even behind the snes here.
Thank you, buddy.
And
Thank you. Thank
maybe even you can get me connected with some money. Don't tell nobody.
I won't. I won't. I won't. I won't. We'll keep that between us. We'll keep that between us.
I appreciate you, brother. We'll see you later.
Thank you. Have a good one. Be safe.